Hello, everybody. Welcome. Nice to see you. We're going to talk about taxes today. And it's not going to be the best part of your life, I'm sorry to say. But it's going to be easy and it's going to be quick. So let's get down to business. We are starting a brand new unit. And so the first topic of this new unit, which is going to be in general about financing our government, how we pay for our government, is taxes. So we know what taxes are for the most part, but did you know that there's two main categories of taxes? The first is called direct taxation, and the second is called indirect taxation. So direct taxation, as it says on the screen right here, and by the way, you can see this slideshow, I assume, in our class materials folder. So that's going to be important. You can fire this up and follow along if you want. And, well, you don't really have to do that if you don't want to, I suppose. But anyway, so there's two kinds. Direct taxation is when you are paying that tax no matter what. You are just simply, it's a charge to be a citizen in this country, okay? Income tax, corporate tax, property tax, those are examples of direct taxations. Indirect tax, however, is when it's not so much a charge just for being a citizen, it's an extra fee you have to pay when you maybe purchase something or when you choose to do something. So for instance, sales tax is one, excise tax, when you drive on the interstate tollway and you have to pay the toll, that's a type of tax you get to pay because you're driving on the tollway. So it's indirect, it's not a mandatory. You can actually live your life in such a way to avoid paying those taxes if you really want to and still be fine, okay? So what we're going to do is we're going to talk about how there are 6 different types of taxes that most of us have to interact with. And so those are the things on the list. Let's go through these quickly one at a time. The first is called an excise tax. This is very similar to a sales tax, but rather than a tax being put on the purchase of every product, it's put on just specific products you might buy. This is an indirect tax, and basically it was the main form of tax up until the Civil War. And so the idea here is that when you purchase, let's say, alcohol or tobacco, or in modern day, gasoline, you have to pay an extra tax on those things, okay? There was actually a big rebellion about this back in the late 1790s when people were having to pay a tax on their whiskey. And they're like, I don't want to have to pay tax on my hooch. You know what I mean? So like they had to have, there was this rebellion. It was crazy. I mean, who would do that? But you know. Anyways, so that's the first tax, excise tax. Okay, let's go to the next one. Oh, here's a map, and it shows taxes on alcohol. Okay, you can look at that later. Okay, number 2 is sales tax. Sales tax is a tax that we are all familiar with in the state of Illinois. And by the way, it is a state-only tax. It's not a federal tax. There's only states that have sales tax. And so it's an indirect tax, which I don't know if I mentioned on the last one, but the previous one was also an indirect tax. And it's whenever you purchase basically any product in the state applies an extra tax to that you have to pay. This is why when you want to buy something in Illinois, and it's, let's say you want to buy a pack of gum and it's like 99 cents, you have to have an extra like 10 cents on hand to pay that extra tax. 4 states in our country don't have sales tax. So if you want to go buy like a computer or a new car or something, go to those states. I mean, they're kind of far away, Delaware, Montana, New Hampshire, Oregon. But go there and you can buy and you can avoid paying sales tax. And it's totally legal, which is awesome. Okay, that's number 2. Here's a map with that. You'll notice again, those states, they don't have sales tax. The one with the most, I believe, is well, I was gonna say Washington. They're number 4. So if you can find them, there's Tennessee, 9.45%. Woo! It's expensive there. Anyway. Number 3 is another type of tax. It's a property tax. This is the first one that's a direct. It's a direct tax, meaning if you have property, you gotta pay. Oh, the announcements are happening right now. This is an interruption. Hold on a minute. Future doctors. What's going on?
New members are always welcome.
I'm gonna pause it. Hold on. Okay, we're back. Sorry for that interruption. I'm recording this during second half. Anyways, okay. Property tax is the first direct tax. So this is what we use to pay for school. Hey, so in a local community, when you have a home or you own a land or property or buildings or whatever, you have to pay a little bit of tax on that. And so that money goes to that local community. It's not a state level thing. It's not even a federal level thing. It's a local thing, which is very, very cool. I guess I said it's not a state thing. It technically is a little bit, but it mostly stays in the local government. So that's cool. It pays for libraries and schools and parks and things like that in your local community. And I could go on, but you don't want me to. So let's skip to the map. Here's a map This map shows that how much property tax we pay. You'll notice that New York has a very high property tax throughout the state, but then look at us. We're like the second most expensive state to live in terms of property tax. Um, that's Illinois. Anyways, okay. Number 4, this one's the big one, individual income tax. Income tax is when you get a job, you earn a salary, and you have to pay a little bit of that salary to the government. There's a state income tax in Illinois. There's also a federal income tax in the whole country. It's the direct tax. Basically, what happens is this. Long time ago, the government was like, we don't have enough money to do what we want to do. And so they started to tax people's income. And everybody, understandably, got really upset. And they said, you can't do this. And so there was a federal court case in the Supreme Court. It was called Pollock versus Farmers Loan and Trust Company in 1895. And the federal government, the Supreme Court, ruled that income tax was unconstitutional. And everyone was like, woo, we don't pay income tax anymore. Well, the federal government was like, but we like this money. And so what did they do? Well, with the help of states, they decided, well, okay, so this is unconstitutional. Well, we'll just make an amendment to the Constitution, and boom, now it's constitutional. So with the 16th Amendment passed in 1913, we have income tax now legal in this country. It's a lot of money. It's very expensive, and that's where it came from. The state level tax, as you can see here, in Illinois is about 5%. It's an example of what we call a proportional tax structure or a flat tax. You're going to read more about that later, I assume. You'll notice California is a very expensive place to live again, as well as their state tax is 13.3%. New York is high as well, so it's expensive to live in New York, like I said. Real quick, before we go on to the next tax type, we have to quickly talk about how you do your taxes. Everybody knows that when you have a job, once a year you have to do your taxes. And there's a few different ways to do that. Doing your taxes is simply ensuring, it's checking to make sure that throughout the year, you've been paying the correct amount of taxes to the government. So you have to fill out some forms usually, or nowadays we get to do this mostly online, which is very convenient. You have to pay your taxes to the IRS, which stands for the Internal Revenue Service. It's the part of our government that handles all of our tax laws and I should say collecting our taxes. In order to do this, you're going to be given a number of forms from your employer. The first most important form is called a W-2. I don't know where they came up with the name for it, but that's what they call it. It's a document that tells you how much taxes you paid that year, because your employer usually withholds the money and then sends it to the government on your behalf, which is pretty convenient, but you don't get the idea. You also then, if you were still doing your taxes on paper, you'd have a government form called the 1040. But most people, like I said, don't do that on paper anymore. You would go online and do it online, which is what I do, and it makes this all a lot easier. The W-2 form is super duper, like, kind of overwhelming to people. But basically, if you look at it, it's going to have some basic information that I'm not going to talk through everything. The most important details are in the first two boxes. This is telling you how much you've earned this year and also how much federal tax you've paid. That's box 1 and box 2. Down here, then, boxes 16 and 17, those talk about basically like how much of your money that you earned was taxable by the state. So not just federal, that's up in 1 and 2, but now how much you earned according to the state, and then how much taxes you paid to the state. So box 2 is how much tax you paid to the federal government. Box 17 is how much you paid to your state government. I know that's annoying and confusing, but that's what it is, okay? Maybe we'll talk more about that in the future. We're skipped that. We're almost done. Corporate tax. This is very similar to income tax, except it's not for individuals like you and me. It's for corporate businesses. So when a corporation earns a profit, they have to pay some of that profit to the national government. This is therefore a direct tax. It's a tax you have to pay just by doing business and earning money in this country. And it was also set up through the 16th Amendment. So thank you, 16th Amendment. It's probably everyone's one of the least favorite parts of the Constitution. Everybody always says the Constitution is like this amazing document of freedom and America and liberty, and we should stick to it. But then they forget, like, the 16th Amendment makes you pay taxes all the time, and that's when they don't like that. Let's get back. Almost done. Social Security tax. This is when. Okay. Social Security is a government program, and I think maybe you maybe know what that is. If not, it's when you're old and retired, the government will send you a small check in the mail once a year. I should say once a month, once a month. Well, we have to pay for that somehow. And so while you're working and while you're young, you have to pay an extra tax, a Social Security tax, to help pay for the Social Security program. So your money now, while you're working, goes towards old retired people now. And the idea, therefore, is that when you're old and retired, the young people at that point in the future will then pay for your Social Security checks. The way it works is that you pay half of this tax, and the person you work for, your employer, your boss, your company, will pay the other half. Um, it's a great program. We're going to see, though, that one of the biggest drawbacks of Social Security is that it's so expensive, and the tax we pay right now, it actually doesn't cover the full expense. Like, we're running out of money for this thing and as a government overall. So that's a big, big issue that we might have to fix. And we'll talk more about that in the future. Boom. So there's your taxes. I did it in 11 minutes with an interruption from the announcements. So what I need you to do is go back to Canvas. I think what it says here on the screen is true, but just in case I change that, what it says on Canvas. And thank you all very much. Have a very wonderful time.